What's up everyone? Today I'm going to go over exactly how much money I've made being invested with Wealthfront for the past 3 years, even through 2020 and going forward what my strategy is going to be. Okay, so stay tuned. Welcome. If you're new to the channel, my name is Josh. I cover a lot of topics around digital marketing, business, entrepreneurship, and a lot of stuff around money and personal finance. So if any of these topics interest you, please hit the like and subscribe button for future content. So I'm hopping right into it. Today I'm gonna go over why I chose Wealthfront, the reasons why I like it, and what I'm planning on doing in the future, and my personal recommendations. So stay tuned through the whole video. This is gonna be value packed. I plan on going over anything and everything around my Wealthfront experience and people who are looking for Wealthfront knowledge and information. Stay tuned to the end. So in order to tell the story about why I chose Wealthfront, I wanna start 3.5 years ago when I had graduated college and I was faced with a tough decision. I had a good job lined up. I had these benefits that were on the table that I just had no idea about. One of them was 401k, investing into your future, your retirement plan. I had no idea what a 401k was at the time. I had to do a lot of research and learn exactly the best way to invest for the future and to set myself up for success long term. Now, I had no idea, like I said, and I wanted to, in addition to my 401k, I wanted to learn how I could do more. I just wanted to get in, and I didn't know anything about picking stock, doing options, any of the stuff that I do now. I had no idea. So I wanted something that was passive, that I could just put money into, that I knew was a relatively safe investment. You know, whenever you're investing, you have a little bit of risk. Two names that came up were Betterment and Wealthfront. And these companies were both robo advisors, and I had learned a little bit about what they do through algorithms similar to the YouTube algorithm, so hit that like button please. Through algorithmic trading and through rules, they allow you to invest at a low cost because they keep the amount of people on their payroll down. In order to keep the costs down, they rely on these rules and robo advisor algorithm. I knew that this was going to be a good way to get into the market that wasn't going to take a lot of time for me to learn exactly how to invest, buy a stock on my own, timing the market, all this stuff. I had no idea. So one of the things that drew me to Wealthfront right away was that it was very passive. And what I mean by that is you hook up your bank account and you can just put in any amount. Over 500, I think, is the minimum investment to start an account. And at the time, there was a $15,000 sign-on bonus. And what I mean by that, they didn't give me $15,000, but I had $15,000 of free portfolio management. Anything above that $15,000 was a fee of 0.25%. So that brings me to my next reason why I invested with Wealthfront. They had a very low fee and a great sign-on bonus. I knew that I wasn't gonna hit that $15,000 mark, relatively soon. It took me a couple of years to actually hit it, and now my account has really gone up, but I put a lot of money into it. It really was one of the reasons why I chose it. Was a good starter account. It was very passive. You just really set your risk tolerance. I'll hop into my account and show you what mine is, and you set your risk tolerance based on like a little bit of a survey they do, and they really set you up for the best portfolio for your risk tolerance. And at the time, I was gonna get $15,000 for free. So there really wasn't anything to lose other than if their stocks or their ETFs that they were investing in go down. So the first reason I outlined was good sign-on bonus. Second reason, that once you hit that threshold, that 15,000 threshold, it was very cheap, very low fee. And I know a lot of people get down on their fee, but in reality, it's a lot less than what a mutual fund charges. Nobody should be putting their money into a mutual fund unless they can get a really good rate, which I don't see anything out there that's even comes close to as low as 0.25%. And in reality, it was just a really smart decision at the time because I had no idea how to pick a stock. I probably would have lost more at the time trying to choose my own stocks and build my own portfolio that way. And I think going forward, Wealthfront's going to be part of my strategy as I start doing my own stuff with Robinhood and M1 Finance. Wealthfront, one of the main reasons I chose it was it was really passive for me, and it was a really good way to get my knowledge up, but also start participating in the market at a good time and at a good rate. One of the things that I always tell people is just make sure you get in with a smart strategy, and if you don't want to buy your own stock, the best way you can do is probably with one of these robo advisors or just buying an ETF. Wealthfront was a good investment for me, and one of the things that I really enjoyed was they are always trying to improve. They have a really good app design. I love logging into their app. They have a really good app interface, and you can sync all of your credit cards, your bank accounts, and it tells you the big picture. So similar to how like Mint or these finance softwares that kind of take all of your financial information, whether it's bank accounts, credit cards, and it kind of combines it into this like big report. Wealthfront does the same thing, and I really like their interface. They also started to implement the cash account, which right now it probably isn't the best, but at the time they were one of the highest interest accounts to put your money into. If you like to keep some money in a checking account or a savings account, it was a really good investment up until 2020. When the interest rates got cut, they unfortunately took a little bit of a hit, but at the time it was like 1.8% return on your money just for having it sitting in a cash account, which is really phenomenal. I'm sure there's going to be people that probably have better bank accounts, but for a place that you can keep your money and then easily transfer it over into investments when you want to, you really don't get much better. Now I know Robinhood has something similar, and you can do that, but I really liked Wealthfront approach to investing. It's really exciting to see your account grow over time. They show you the time weighted average, the money weighted average. They show you the tax loss harvesting, which is another great benefit for having a Wealthfront account. They show you, all the dividends that are being reinvested. It's just really good to see all that in one area, and it's really good to navigate through. And if you're just starting out, Wealthfront can be a great tool to gain a good knowledge around what investing is, then you can branch out from there. So now I'm gonna hop into my computer, show you exactly how much money I've made over the past 3 years, show you what happened during 2020 with the dip that everybody went through earlier this year, and really show you the interface of Wealthfront, what you can expect, what I like about it, and I'm going to show my screen. So here you go. All right, so now I'm gonna take you into my Wealthfront account, and actually gonna break down the numbers for you, show you what I like and what I, maybe don't like about the brokerage. So the first thing you'll see here is my account based on the projections and my net worth today and my net worth at retirement. Now I like this because it really consolidates all of my financial information. So I can link my credit cards down here. You'll see everything down here. It's all linked: liabilities, assets, cash, investments. It's all there. And then it puts out this number of net worth today. So that considers all my credit that I have, used. And it also spits out this net worth at retirement based on some of their projections, based on your account growth, your average savings, and the amount of money that you need to have saved up by retirement. And then it goes into, exactly how that account will last you once you retire. Now, I haven't done too much with this. This is pretty default settings. Retire at 65. Here's what I'm saving and what I'm currently investing into my account every month. Just a simple, house here, if I wanted to invest in real estate. Now, I want to hop into my account here in a second, but I want to point out here that my personal cash account right now, I started to withdraw from this as the interest rates were cut, because it went from around a 1.8% yearly interest rate, which was really good, very high up there in terms of competition with some of the other banks like Ally Bank with their high savings or high interest savings account. But I started to withdraw money from this because it would go a longer way through investing, and the interest got cut as expected with everything that happened this year. So the stocks were really a better option for me, so I started to withdraw from this, but this is a really nice benefit to have here, the cash account. Another thing that I want to point out that is really cool is actually their portfolio line of credit. So this is actually a really neat feature for Wealthfront people who invest through their platform. So you can actually borrow at the pretty low interest rate, if you ask me, against your personal investment account. So right now I have around $36,000 in there, and the amount that I'm able to borrow is $10,800. which is really good if I ever needed that, like if there was ever a windfall or an emergency. That's a really good thing to have, and it doesn't make you sell off your investments just to recoup something that, to pay something off. So that's a really nice benefit to have. So hopping into my account here. So as you can see, my all-time, since starting the account in 2017, I am up, as you can see here. When you come to this page, they have your total account history here, which is really nice to see. The breakdown of your money weighted return, your time weighted return, tax losses harvested, and then your breakdown of your portfolio and how it's diversified. So my risk score is a 9.5, and that can be based off of a quiz that I did when I first opened the account, and also how old I am and how long I plan on investing for. And since I'm a long-term investor, my risk score is relatively higher than, say, someone nearing retirement who should probably be looking at safer investments like bonds. So as you can see, a lot of my breakdown here is 35% US stocks, 29% foreign stocks. And these will fluctuate. As you can see, the returns are significantly different. And one of my favorite things about this is the dividend stocks, and I'll get into that in a bit. But I really like seeing the returns that my dividend stocks return and automatically reinvest them, which is really nice. So I'm going to break down the numbers for you guys right now so that you get an understanding of how this account's performed over the years, their algorithm. And again, this is all based on me just dollar cost averaging, just basically having a automatic recurring monthly investment going straight into this account. I don't even have to think about it, and it comes straight out of my bank account, goes into this. I think I have it set for $200 a month, and it's just really, really convenient. So I'm going to break down the numbers by year. In 2017, I started the account in August, so there was about 4 months for 2017. I started with an initial deposit of around $2,000. Yeah, exactly $2,000. And as you can see, and I like this, it basically breaks down your portfolio net worth and the net deposits that you've made. So you can see how much your account's gone up or down versus how much you've actually invested, which is really convenient. So at the end of 2017, I had invested a total of $5,900.18. And my portfolio was sitting at $6,258, so $6,258.87. That's a difference of $358.69. And I went back and looked at my statement, and the total dividends that I made from these 4 months was actually $81, which is pretty good considering such a small portfolio. And if you think about compounding interest, which I'm going to get into in a bit here, this is really impressive. And it really started inspiring me to start investing more into this account over time. So in 2018, if you guys followed the market, had a sell-off at the end of the year. So the beginning of the year was pretty good, good growth, but at the end of the year, there was a lot of sell-off in the December timeframe, and it's had investors scared that the recession was starting. It was all doom and gloom and everything. Guys, this is just not true. And coming back to investing, if you're a buy and hold, just buy something and just hold on to it through recessions. If anything, buy the dip. I just do dollar cost averaging to kind of prevent myself from getting too involved with the stock market. As you can see here though, at the end of the year, I had significantly deposited a lot more. So as you recall, at the end of 2017, it was around $5,900 that I had invested. And at the end of 2018, we're at $19,201.68 totally invested that came out of my pocket. Now my account was currently sitting at $18,026. So that's roughly a $1,200 difference there. And I wasn't worried. I was actually investing more. As you can see these little steps here. It went from basically the middle of December, I was at 17,700, and I went all the way up to 19,200. So I invested another 1,500 in about 2 weeks here at the end of December. And this is because I like to really get in and start buying and putting more money into the market when other people are panicking. In 2019 here was a really good year. 2019 was a phenomenal year for the stock market. I think it was up like total, it was up probably like 30%. It was super, super profitable for a lot of people. The bull market was at peaking, kept getting me more and more excited about investing. By the end of the year, I had brought my account up to $25,400 of my own money invested, and my account was worth around $29,170. Now, this $29,170 is based on, the stock growth, having put more money in during the dip, which kind of helped out, and dividends. So 2019, and this is the power of compounded interest and dividend growth. 2019, I actually got $683.97 from dividends. That's incredible on an account this size. Really, really impressed with that, and it just really started to make me more optimistic about the market. Now, as most of you know, 2020 has been a little bit of a rocky year, as you'll see when I click this button. But I just want to say, if there's anything that 2020 has taught us, it's just that even during the craziest times, there's probably going to be a rebound and a leveling out later on. We saw it in 2008 with the Great Recession. It's really, really important to just, if you can, don't bail. Just keep things in there. And I started buying more stock in 2020. So as you can see here, right here is obviously when we all know exactly what happened. My portfolio went from being around $4,000 in the black, in the profit, to immediately diving, pretty much going down. At the lowest point, it was around $6,000 in the negative. So that's really, really incredible, that we've, that fast of a change. But what you'll see here, and don't ignore this. This was a fluke. Something was deposited into my account as a fluke, and I had to quickly withdraw it. But as we started to recover this year, and the news started to get a little bit better, things quickly rebounded. And if you kind of held your positions, maybe invested a little bit more during this time frame, you really probably set yourself up for success. And that's kind of what you see here. So I continued to invest less and less, just because of all the uncertainty. But nonetheless, I definitely kept putting in around $100 every 2 weeks. And lo and behold, we are currently, as of December 23rd, I have invested a total of $28,737.68. My portfolio is sitting at around $36,871.36. So, after 3 years of being invested with Wealthfront, having invested over $28,000 of my own money, my portfolio is at $36,871.36 for a total growth of $8,150, in about that ballpark. Now that's crazy to me that in 3 years that this has happened. And I know that the markets fluctuate. I went from being down 6,000 in March to now towards the end of the year being up 8,000. Huge swing, but it's what the market does. And if you have faith and you stay true and you keep your money invested and you don't sell at the wrong time and you buy at the right time, you can really, really start to reap the benefits in a short amount of time. Nonetheless, this is only the period of a year. I'm actually kind of baffled. I don't have the dividends from this year yet because they're still rolling in from December. Pretty much a lot of companies pay out their dividends starting mid-December all the way through the beginning of the year. And they're pretty much the bigger dividends because it's year-end dividends. So they're bigger distributions. So that is everything in a nutshell. If you are looking to get started with Wealthfront, I'm going to share my referral link. It really helps me and the channel out. You get $5,000 free invested for starting an account. I also get a little bit of a help out, so it's a win-win. And if you've gotten any value from this, I'm going to be doing these kind of breakdowns every 6 months maybe, to highlight, you know, what I've invested and the growth, even during the bad times, the good times, everything. It's really important to see someone succeed or fail or whatever during these times. So I'm going to be highlighting the benefits over every 6 months. So stay tuned, subscribe, and I'll see you in the next one. So that pretty much concludes exactly, all the stuff around Wealthfront. And my recommendation is, if you're a beginner, go for it. Sign up with Wealthfront. They have a very low minimum investment. If you're already thinking about it, you're probably not gonna reach that $15,000 threshold if that's still going on. You can use my link below to get that $5,000 of free managed money. It helps me out, helps the channel out. Stay tuned for future. I'm gonna be going into Robinhood, Fundrise. These are all different accounts that I have. These are all finance apps that I branched out into after Wealthfront. I started with Wealthfront. Thank you for watching.